my stop losses were hit. What does that mean? Well, one, it means that I'm kind of out of the market right now. Now, it could be the worst time to be out of the market, but I set my stops where I set them. They got tagged yesterday, and now I'm kind of sitting and waiting to see what happens. A lot of people are going to be angry about that, and that's okay. I had those set at a certain level for a specific reason. It happened. Oh, well, what can you do? So basically, let's talk about that for a minute. So I was massively up, right? And then I set my stop losses just a little bit above break even in terms of like some positions I allowed to lose a little bit more, some positions I didn't allow to go red, and it came all the way back down to where I was basically at break even from where I started, and that's where I got stopped out. Now, could that be the worst thing ever? Very much. It very possibly could be, because traditionally, where we are right now tends to be one of the best places to buy. It just so happens that that also aligned with where my break even stop loss came in. And now I'm kind of sitting and waiting on the sideline for a short period of time to see what's going to happen next. And when some of the signals come in, I'm going to be going pretty hard back into the market pretty instantly. So there's that. Now that happened across the board. I've had stop losses set for weeks on my crypto, on like my IREN, on my MicroStrategy. It's all been sitting there for a really long time, and it got tagged yesterday. So there you go. That sucks. I don't like it. The only thing I'm still holding right now is CLSKW, the warrants. That's the only one I'm still holding. I'm a little bit down on those, but I'm willing to hold them for now. I didn't have a stop on those because it wasn't a huge position, but it was a decently sized one. Okay, so that's basically it. I've been basically wiped at a break-even pace, break-even mark there, and now I'm waiting for that bullish structure to come in to say, hey, it's time to come back in. And so I'm not too upset about that because a lot of the things that are happening are news-driven, especially by tweets and like little tidbits from news stories coming through here. I have unusual whales up here on X. That is honestly, they're pretty great. They come out with a lot of stuff. So today, you can see here, 6 minutes ago, Trump says Japan, China cannot keep reducing the value of the currencies. Are we going to go into a currency war next? I don't know. And that is part of the problem. Until we get clarity on things like the trade war, we're going to keep getting these small relief bounces followed by massive selling. And at any moment, these can come in and send us tumbling back down again and again. And if we look here, there's one around here where Trump said you cannot look at the stock market right now. And that's basically just saying that, we're going to be having a up, down, and all around kind of market, and it's going to suck, it's going to hurt, and at any moment you could be losing 20% of all your wealth. So don't look at it. That's basically what they're saying there. Right here, 2 hours ago, Elon has seen his net worth decline $145 billion since Trump's inauguration. He is taking a huge punch in the gut, and he would not be doing that without, happily doing that, it seems, unless there was something either he wanted more than money or he thought that he's going to get significantly more money at the end of this. They don't do that for no reason. The billionaires are still in this corner. They want something here. Is it money? Is it power? Is it something else? I don't know. We don't know. We won't know till we know. And when we know, well, it's probably too late for us to really get to do much about it. So we got Canada is charging the northeastern United States 25% more for electric and have threatened to shut it off, to turn off the electricity for these regions of the United States if Trump does not ease up on the trade war. So the trade war is flaring up, which is concerning. That is a problem. And that is one of the reasons that I have my stops where I had them, because this is the unknown part, right? Like we can talk about, cycles. We can talk about, it's coming into a low. It's the worst time to sell. But like one tweet and it all comes tumbling down. It comes even lower and lower and lower and lower. And then you're locked in. Now, I'm not saying, of course, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. You must do your own research. You must come to your own conclusions. You must decide whether or not you are willing to take risk and how much risk you are willing to take. We're all adults here. Manage accordingly. I managed it to break even, hit break even, and now I'm currently waiting to see what's going to happen next. All right. Okay, yeah, look at this. Ontario Premier Doug Ford said they will not hesitate to shut off the electricity completely just 8 hours ago. So things are heating up. Make no mistake, they are heating up, and it's just going to take a couple more back and forth tweets and news and headlines of world leaders digging in their heels, and we could see some serious capitulation here, and that's gonna be really rough. Oh, here we go. Billionaire Ray Dalio says the U.S. won't be competitive in manufacturing with China in our lifetime. Kind of meaning that we unless we get the robots, unless we get the AI doing the majority of the heavy lifting in our manufacturing economy, we are going to likely see a bit of a GDP crunch here, a bit of a decrease in GDP because we just can't compete, and that's fair. There's some good ones in here. 10 hours. Trump said Canada is a tariff abuser and always has been, but the United States is not going to be subsidizing Canada any longer. We don't need your cars. We don't need your lumber. We don't need your energy. And very soon you will find that out. I don't know. I feel like maybe some of these states needed that electricity. We'll see. We'll see what happens there. See, it's just escalating. And that one was 10 hours ago, right? Zelensky has apologized to Trump, okay, after that Oval Office incident. Okay. So that one's a little positive. Let's see what else is going on here. I guess Redfin's getting bought. Where's the one I wanted to see where he's like, just don't look at it. Who are some of the market indexes are just some response to tariffs? It pays to listen. That's interesting. When the markets tumble like this in response to tariffs, it pays to listen. Rand Paul. All right, here are the ones I wanted to look at here. Okay, U.S. Treasury Secretary has said there's going to be a detox period in the economy. What do you think a detox period is? That's a recession, right? That's just what that means. Are we actually in it yet? I don't know. No, probably not. Well, they won't tell us till after it's already over. So, all right. And then, of course, Trump has said the U.S. economy faces a period of transition. Transition is not going to be good for the market. It's not going to like that. It's going to have death throes going down on that one. All right. There's another one. Where's it at? Where he says you can't watch the market. Oh yeah. This was yesterday as well. Trump says a transition period for the economy is likely per CNBC, and adds you can't really watch the stock market. That means it's not going to be good right now. Okay. That's what he's saying. He's signaling to us that, hey, there's some things I'm doing. It's going to cause a ruckus. You're not going to like what you're looking at the stock market right now. Maybe don't look at it. That's basically what that means. So they're prepping us for a recession. And I know I said that yesterday. I'm going to say it again. They're prepping us for a recession. And that's kind of why I'm not in at the moment, because I don't know where it falls. It takes one tweet, one headline, and we end up falling 3-4% on an index, which is an insane amount of money. There were trillions of dollars lost yesterday, liquidated yesterday, and that was ridiculous. And I don't feel like sitting there watching my net worth dwindle away while world leaders drag their heels, dig in, and have a pissing match. I don't really care to do that. So I'm going to sit here and wait. I'm going to look for my pitch. There's probably going to be a relief rally. I'll try to catch some of that, but I'm going to be conservative in any moves that I'm making at this time. And of course, like I said before, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. You must decide when you're willing to take risk. You must decide how much risk you're willing to take. You must decide before you enter where you will exit, either to the upside or the downside. Have a plan. It's very, very much a moment where failure to plan is planning to fail. So have a plan. Don't just go in and be like, I'm going all in. We're going to the moon. Like, that's nonsense. Don't do that. Have a plan. Always have a plan, and follow that plan. So, a little while ago, I had a plan. I wrote it up, and I said, if it comes back to break even, I'm going to get out and wait and see what happens. And that's what happened. It came back down to break even for me. Some positions lost massively, some gained massively, and it all kind of evened out to break even over the last 6 months. And I don't like that. It pisses me off. So I'm going to be sitting and waiting for a little while. So today we got the NFIB Optimism Index that came out, basically on brand there. Job openings, that comes out here in about 20 minutes. That's going to be important here as well. That's going to tell us what the Fed is thinking a little bit. Tomorrow is CPI. Okay, that's going to be a big market mover. The day after, PPI, another big market mover. So we got two big market mover days tomorrow and the next day. And then next week we got FOMC. Okay, so couple of big weeks ahead of us. We're going to see. We do also know that Trump's plan is to put stress on the market in order to lower interest rates so that the government can refinance its trillions of dollars of debt. It's time to do that. That's one of the reasons the Bitcoin cycle comes around this time. It's because the U.S. needs to re-up its debt, which means we got to increase M2, which usually sends sends Bitcoin flying. And in order to do that right now, the government doesn't want to re-up its debt at 4 or 5%. They want to do it closer to 0%. So in order to do that and get the cuts necessary, they got to tank the market. That's just a necessity. That is part of that. That is one of the reasons that this is happening. It is an orchestrated thing in order to come out to a specific result. That specific result being stress on the market, giving the Fed room and priming them to cut rates so then that the government can refinance its debt at a lower rate. Okay, that's what's going on here. When is that going to stop happening? It's going to stop happening when they get what they want. Could be a couple of months of this. We don't know. That's the problem. That's therein lies the issue. We don't know when this is going to end. So and that's just one part of it. The other part of it is the trade war, which could be an element of bringing down that market to prime the Fed to make those cuts. And again, that takes time. This Fed moves slowly. They move at a glacial pace. And this could go on for weeks or months. And crypto doesn't run on its own. If the stock market is tanking, crypto's not going to be taken off. Right? The crypto is not going to be launching to the moon while the QQQ is hitting lows. That's just not how that works. It's not going to do that. So we've got to see these objectives become achieved. And until then, we're going to experience some pain. We may get some relief rallies here and there. Like if I go to the QQQ right now, we could be getting a relief rally right now on the daily. We're up 0.39% off the lows there. That's not so bad. If I bring in my drawings, I think I'm right at my big red line there. By the way, this big red line was the line saying that if we crossed it and stayed below it, that we could be looking at potentially an additional 10% drop. And that was that was hit yesterday. That's one of the reasons I was like, ooh, I should probably take a look at my stop losses, make sure they're all there. They got tagged. That sucks. But yeah, we came down to that, right? That was a 12% drop from the high. And we could be looking at potentially a 17%, which would take us to the August 5th lows. I do think that is, September 6th lows. The August 5th lows are all the way down here. Let me go ahead and just, this is the August 5th low right in here, right over there. And that was a drop, or would be a drop of about, let's go all the way to it. This is September, yep, August all the way down here. That would be a drop of about 21%. That would be your average mean reversion coming through. So we could only be halfway through this. And of course, we've got on the QQQ here, we've got a double top. So we got a top here, top there. We broke that midline there on it. And where does that double top complete its move here? Well, you could argue it started here at 448, or potentially if that doesn't hold, all the way down here at 423, which would be that full 21% retracement. So if this double top is going to do its full move, right? It's full move, like here, boom, 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 and then we come to something like this. We do a little action down here, and then we come all the way back up, maybe even higher. Well, probably higher. That's just kind of how the stock market works. So that's what I'm watching for right now. I'm looking for signs of this thing. We could see basically some action like this right here, right? We could be right now in a, let's take a look. We could be in, you can see that this is steepening right here. This is a steepening channel right here. Look at that. We could just go sideways to about 470, 474, 475, and then come even more aggressively down. So just the aggression of how badly we come down and how insane the sell-off is. Like, look how big those red candles are compared to those green candles. So I will trust this thing when we get back out of this aggressive channel. When we get out of this aggressive channel, I'll be feeling better. When we get back into this less aggressive channel, and looks like it wants to come to the top of that, that'll be great. Once we break this less aggressive channel, I'll be feeling pretty good, actually. I'll be feeling pretty good about that. In fact, I might want to adjust that a little bit to be the top. There we go. Okay, I like that. I don't hate that at all. So yeah, I'm kind of watching that right now. We've got, it's just like to the upside, right? I'm looking for, let me go ahead and get array, and we'll come here, right? So we got our one here, boom, kind of watching that. I want to see that break, that breaks. We come back test like maybe this white line here or something, or perhaps break above like a certain, one of these moving averages to come back, test it from above. Then I'd be looking for it to come down, right? Because right now we got to test it from below, right? We're going to have to test this from the below. Let me turn off some indicators and turn on some different. Let's turn on some moving averages. Okay. Right now, we kind of need to come back and back test the 200-day moving average from below and see if it is going to break it or if it's going to be a leg lower. Okay, that's what we need to do. So let's go look and see how that looks usually. Okay, let's see how that looks. Let's see when was the last time that happened and how did it look like. So when we do it from the bottom, right, we had the double bottom, right? Boom, boom, bottom, bottom. Came above it, right? Tested it from above and then bounced. And that was your signal of we're going higher. Okay, let's go see 2022 when this thing first broke below it. Okay, right here. Okay, so just like this, does this look familiar right in here? Does this look super duper familiar right there? Perhaps exactly what we're looking at right now. And what happened? So we came down, right? Tested it from below, kind of fiddled around a little bit, came lower, tried to go higher, failed at this structure right there. Let me go. Failed at this structure right here, went lower, came back, tested the 200 one more time, and then as soon as we went sideways, and as soon as that structure gave in, we went way down. Okay, that's what we're looking for right now. We're looking for a counter trend bounce to come up to the 200-day moving average. We're looking for it to come back down to some sort of structure that it formed down here at the lows, right? And then make a lower low beneath that, just beneath that candle close, just beneath that structure. And then that's a signal that's going to go a bit lower, and then maybe test the 200 one more time, and then start going lower. And that's where we'll get our full like 20-something%, right? Let's see if that was here. Yeah. So yeah, well, we got way more than that. When was this? 2022? Yeah, we got 37%. We ended up getting like 37% out of that one, but then it ended up being what? 30%. Yeah, when we came up and tested the 200-day for the second time and failed, that was when we got our 30% move down. So we're looking for something like that right now. How would that look? So if we come over here to where we currently are right now, okay, let's get our little drawing here. So we're going to come down here, like that looks like coming down here, kind of doing some sideways action, coming back up, coming here, back to the 200-day moving average, coming back down to this zone, doing some sideways action. Let's some better up and down movement there, and then going up maybe one more time, and then just kind of puking it out, or just from here puking it out. Basically that's what we're looking for. I know that squiggle looked terrible. Let's fix that. So we're going to come down, right, back up, come down, do some of these, maybe go a little lower, or if we're really lucky, maybe we'll come back up, and then that'll be the end of it, and we'll just come right back up to all-time highs. That's kind of the option here. We back test the 200-day moving average. If we break it, we're going all the way back up to all-time highs. If we don't break it, we're coming right back to whatever structure forms down here, right? Or maybe it's a little lower, maybe it's where it currently is. And when we test that structure, if we get any candles that close beneath it, we're going lower. If we don't, if we get a candle that closes somewhere between this white line here, like 490 and 475, somewhere like up there in the higher end of that, then we're going to go back to the 200-day moving average. And if we can close above the 200-day moving average, well, then we're going to go higher. And that's all there is to it right now. And that's going to be kind of basically how I look at everything right now. Bitcoin, all risk on, all crypto. That's how I'll be looking at all of that right now. I'm looking for it. Is it going to backtest the 200-day moving average? Once it does that, is it going to fail or is it going to crush it? And right now, Bitcoin is looking like it wants to do that, right? We came down. So the fact that we came up, right, tested the 50 and then crashed right through the 200, if we don't get right above the 200-day moving average, like this is where my signal is that we're going back up to 100,000 or higher, is the 200-day moving average right now. So that's going to be 83,448. We get above that, I'm back in all risk. Let's go. All right, to the moon. I will say that my Solana also sold out. I had a stop loss on this, and I've had this for a while at 118, and it came all the way down to 112. So I got stopped out of 99% of my Solana. Don't cry for me though, because I got stopped out at like 300% profit. That's fine. I'm not too concerned about that. Once, yeah, see, but this is what I'm talking about right here, right? We came down, came back, tested the 200-day moving average, came down, back down to this level of support and cracked it to the downside. All right. That's exactly what I was saying there from before, right? We came down, tested the 200-day from below. Whoops. Tested the 200-day from below, came back to that structure, came below it. And look at us right now. We're getting trapped beneath it. So as long as we're beneath this line right here, as long as we're beneath this right there, I'll make this white and I'll make it 4. As long as we're beneath that, we're in trouble for Solana. Solana's in trouble as long as we're beneath that, okay? That's just no ifs, ands, or buts about it. As long as we're down there, we're in trouble. And where could this go? Let's take a look here. Where could it go? This is kind of where the flag is. And about there right now, this thing could drop down to 86 on a dime, right? It could drop down to 86, which would be this little structured support over here back from January 2024, okay? We are currently at the very, very bottom of this support structure here. So there's a lot of resistance above our hits right now. And our next level of support is down in the 80s down here from January, okay? So that's what I'm looking at. That's kind of why I got out. I think things are a little too hot right now. World leaders are being a little annoying right now. So that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio. Do not panic. It is time to have a plan. It is time to look at this analytically. It is time to wait, watch, react, don't predict. It is time to look for structure because this thing could turn on a dime or fall further off of a headline. Okay, so this is what's going on right now. With that said, have a profitable day.